I'm Larry Williams, and I'd like to welcome you to the Larry Williams University. Here we are today overlooking our favorite campus, the beautiful Botanical Gardens in Sydney, Australia. I'd like to give you a lesson on the first indicator that I ever developed back in 1966, Williams percent R. It may well be the most widely followed indicator in the world because every day, every stock in every newspaper in China has a Williams percent R at the bottom of it. There's more investors in China than there are in any other country than in the world, and that's why I think it may well be the most widely followed indicator. But despite that, and despite that I created it in 1966, it still isn't being used correctly. So today's lesson, how to use Williams percent R. I'm going to turn right to our charts and show you some techniques to use it, how I use it, and a little twist you haven't seen before, even if you are well aware of Williams percent R. So with that in mind, let's take a look at my charts. What I have here is a chart of soybean meal. You can see Williams percent R, that's the black line at the bottom of the chart. When it's below the green line, as you can see, we're in the buy area most of the time, and we get immediate rallies in the marketplace. There's some more examples of it. Get down in the green line, look for the market to rally. Williams percent R dips, and we get nice rallies in the market. Those are really great buying points. However, there were some selling points that weren't profitable. There's a sell that didn't make money, sold too early in here. Lots of sells in here that were not profitable. So we need to ferret out or work out which of these signals are going to be the good ones and the bad ones. So how do we do that? Pretty simple. I'm going to put up my Will Trend Index. Now if you don't have the index, don't worry about it. It's similar to the Wilder's volatility. I like mine a little bit better. After all, I created it. I think it does work better, but any basic trend following mechanism will work with what I'm going to show you. Now, we can use the percent R indicator in conjunction with the trend. In here we see the trend is up, so we want to take percent R buy signals, and we're going to pass on all of these percent R sell signals. Look at all the sell signals that didn't work. All these little points along the way were not successful. Why? Because the market was in an uptrend. Same thing over here. We see percent R was in the sell zone, but none of those were successful. Finally, one was, if you would have waited a little bit, but the reason they didn't work, it's simple. The market's in an uptrend. You don't want to be taking the sell signals. You want to be taking the buy signals. That's what you want to focus your attention on, is what is the trend of the market, and then get in phase with that trend. Now watch this. That's the other lesson to learn. Once the market changes trend, as it did in here, percent R, usually on the first pullback doesn't pull back all the way into the green line. That's set at 25% incidentally. The red line is set at 75%. And the blue line that you see here is at 50%. That first pullback usually just dips down in the area of the 50%. So there is your buy signal right there. Bingo. What a nice buy signal. So once the trend changes, the first pullback doesn't usually dip all the way into the 25% area. Now also notice I'm using a 4-day percent R. If there's anything that's the magic of this, it's the time period that I found certainly works the best for stocks and or commodities. Here's another example. Market trend change back to the upside here. Notice our first pullback, though, doesn't go to the 25% area. It's very short-term pullback. Why? Well, just think about it. If the market's just resumed a brand new trend to the upside, it's not going to dip way back on the first little pullback. So once there's a trend change on the market, don't look for a large pullback in the market. Here again we see the market turns positive. It's a chart of soybeans in October 2007, and the first pullback is very short-lived because the market's in a strong uptrend. The typical percent R, or overbought, oversold follower, would never have gotten in here. They would have been waiting for lower prices, but we're not going to do that. The first price trend change, don't wait for a big pullback in the market. The market will give you just a little bit of a dip, get aboard, and you're going to get a lot better buying opportunity in the market. So there's a couple ways, hopefully you've learned to use percent R today then. First of all, make certain you use it in conjunction with the trend, and we can identify trend with my Will Trend, Wilder's volatility stop, 18 bar percent average, whatever you're doing, any trend following mechanism. And then first trend change, don't look for a big pullback. That's it. This is Larry Williams, wishing you good luck and good trading with Williams percent R.